Everybody's really excited about the conditionally approved bank charter for SoFi, but don't forget, their superpower is that they power almost all of their fintech competitors. Let's just say you run a bakery and you're competing against your evil twin who also runs a bakery. You guys all need flour for every single piece of bread that you make. And you're like, yeah, I'm finally going to beat him. I'm finally going to overcome. I got this new sweet chocolate bread or something. And then you find out that actually the supplier you've been buying all of your flour from is owned by your evil twin. And not only you're buying from him, but every single other bakery in your country is also buying all of their flour and all their supplies from your evil twin. That's kind of how it is for SoFi. So you're probably already familiar with the fact that SoFi started out with lending. Check it out here. We have student loans, personal loans, home loans. These are revenue figures from their financial statements. And they've started to offer a whole bunch of other things, stock trading and all these different other things. But if we go down to the middle half of the page here, we have the technology platform segment. And if we zoom in a little bit more and check out the adjusted net revenues, we see that underlined there in the red, the technology platform makes up almost 20% of the last 12 months of their revenues. Now we're coming up on the 2021 full year numbers here soon, and I suspect this will be even better than what we're seeing on this financial statement, but makes up about 20% of their revenues right now. And that comes from Galileo, which is an acquisition SoFi made in 2020, and they make APIs that make it so, like, if you and I were going to go and start a fintech company, rather than hiring a whole team of programmers and developers and, you know, all the infrastructure and human relations and all that stuff that's required with having a team, we could just outsource little bits of programming and development to Galileo, which SoFi owns. And SoFi runs 90% of all the digital banks in North America and the majority of the top 100 fintech companies around the whole world, including like Robinhood, Revolut, Chime, Monzo, TransferWise, and like many, many other fintech companies. And so that's what I'm saying with the flour analogy from earlier. Basically, if you're looking at SoFi and thinking like, oh yeah, but they're going to get smashed by their competitors, actually, the more their competitors grow and succeed, the more they succeed too. And right now, these numbers don't make up a huge portion of their revenues. And thankfully, with this bank charter and their lending products, like we saw here, are going to be even higher margin. But this technology platform segment is really SoFi's super secret power that's going to give them really big, strong, high margin growth that really separates them both from traditional banks, who have all kinds of, you know, fees and expenses associated with brick and mortars, as well as all the other fintechs who aren't growing automatically when their competitors grow like SoFi is. And so when we see that Galileo accounts have reached 89 million as of last completed quarter, that means they have more and more growing access to people using all these different services like Revolut, Robinhood, TransferWise, and that's probably going to eventually in the future lower their customer acquisition costs. Customer acquisition costs, as you probably already know, are one of the biggest expenses and currently one of SoFi's biggest expenses, but for all banks. You know, they'll do credit card bonuses and miles and programs, discounts or interest rate bumps or things like that to try and get people into their service, because even though they might be spending, in SoFi's case, I think they spend $800 or so in marketing or different, you know, incentives to get people into the platform, but they expect that they're going to be doubling that over the lifetime of the customer's usage. And so that's one of the biggest expenses for banks. And that's probably going to be going down based on the information they can farm through Galileo. But it works out twofold, because they're not only getting this kind of information that will make it easier and cheaper for them to acquire customers in the future, but they're also, you know, getting revenues, high margin revenues from all of their competitors as this goes. And if they do get competitors who are like superior or growing in a slightly tertiary segment, they don't even need to worry about expanding into that segment. I'm sure they will, because SoFi is all about, you know, offering completely full service, starting with young, kind of educated, wealthy people. But you know, as those competitors, so to speak, are growing, they're going to reap the benefits from all of those all that customer growth as well. And so if you're just starting to learn about SoFi, that's the most exciting point. That's the most exciting. That's their secret sauce. And not a lot of people are talking about it. I think in the coming years, that's going to be growing and growing and growing. And the more of the market they control, the stronger their pricing power will be, and therefore the larger their margins will get. And basically, this is software as a service, which is kind of as high margin as you can get. So that's something to be really excited about for SoFi investors. If you want to learn more about the company, check out my full video up here. And if you want to hear my thoughts on the bank charter and what to be careful about with that bank charter going through, click on this video right here. Love you guys, stay generous, and talk to you soon.